Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining us. As always, I'm your host, Lance Pederson. This is the Real Estate Risk Report. So today I have with me Ruben Greth. So Ruben is the host of his own show, as those of you who are watching the video can see in the graphic, the Capital Raiser Show. He's recently crested, I think, 100 episodes, and probably has even more than that he's recorded that have been released. He also is he's also works sort of with a firm in Arizona called Bakerson, who is a multifamily investor, deep value add, and he sort of serves as the, one of their capital raisers, investor relations sort of people, building relationships to help capitalize their deals. So I've asked Ruben onto the show today. His podcast is going gangbusters, and he's really sort of attracted many participants in the space and befriended them and built relationships. And I think at the heart of it, I want to kind of highlight just how important, even though in this post, COVID-19 world we live in, we can't see each other, how people like Ruben have been able to continue to grow and build and deepen their relationships, and really how this space, kind of the middle market real estate space has really become, I think, although, real estate is very disparate and it's all over the place, just how much networks and masterminds and these relationships really drive this ecosystem. So, Ruben, why don't you share a little bit with us, just kind of, how you got interested into real estate, how you ended up sort of becoming the host of a pretty popular podcast.
Right on. Lance, thank you so much, brother, for having me on. I'm really excited to be here. And let's see, if you want to go into my story, I think the first part that I'd like to bring up is that my father was a real estate investor. He passed when I was fairly young, when I was 7 years old. But I remember being in his blue Explorer truck, his Ford Explorer truck, and we would go and pick up the rents at different properties. And he told me, he was a doctor and also corporal in the military, but he told me I didn't make my wealth, in politics or as a MD. I made it as a real estate investor. And I always heard that, but I didn't really, it was like a seed was planted, but I never really took action on it. I thought I might actually go down the same path he did in regards to becoming a doctor. In fact, I got a degree in chemistry thinking maybe that would be a stepping stone into pre-med, but decided that was not the direction that I wanted to go in. So I didn't know where to start. After I graduated college, got into mortgages. That only taught me how to sell mortgages, taught me a little bit about finance. But from there, I found a group that was teaching a bunch of different single family strategies. And they had one class on multifamily. And I learned all about, the cap rates and why it's so much more powerful for scaling. And that really became interesting within the real estate sector to focus on that particular asset class. And I started a meetup. A gentleman from San Diego came to town and was buying a bunch of fourplexes, but he had a bankruptcy because he lost all his cash in spec homes during the crash. But he was very much of the mindset that this was going to be the biggest transfer of wealth in the history of mankind, or at least, it was going to be a big one. And he started purchasing multifamilies. And because of the bankruptcy and my background in finance, I didn't really understand how he was doing it. But he was essentially raising all the capital and taking these properties down as a joint venture. So I said, hey, dude, can I follow you around to your projects and film you? Maybe I can put it on YouTube and get some attention for us. And maybe I can attract some investors. And he did. So we started talking about like cash flow and liabilities, and we would go through our projects and explain how we could find it, fund it, fix it, and then put it back on the market after being tenant occupied, and do it very aggressively in a very quick time scale. In a matter of 15 days, it would be, restored to rentable condition and then back on the market, or we would just keep it. And from this YouTube channel, my first social media platform, thought leadership platform, we raised like $600,000 for a few multifamily projects. And he got excited and was like, "Hey, you should focus on marketing." But then he was so over leveraged by the contractors that he started not showing up for all this marketing stuff that I had paid for. And we started getting into disagreements, and I left. I broke up with him in terms of our partnership, and eventually ended up back in corporate America. Couldn't stand being behind a desk. So I left that and disappeared from real estate, was completely off the map for a number of years. And then I did hang my license. I got a real estate license and hung it with the broker that sold us all the multis back in the day.
Mm-hmm.
And I'm like, "Hey, so I heard about syndication. Who do you know that syndicates?" He was a specialist in multifamily. He's like, "Oh, I sold a property to Bakerson last year. It was $5 million down in Tucson. Why don't you go talk to those guys?" So I did. And I'm like, "Who do I need on my team? I'm interested in syndication. I want to know more about it." And they kind of turned it around on me, and they're like, "Wait a second. You used to raise capital for multifamily on social media, and you could do it without ever asking people for money. Do you think that you could do that for us?" I'm like, "Well, I could try." So they brought me on board, and I immediately knew that I needed to start another thought leadership platform, because that's how I raised money in the past during the crash. So I started the Capital Raiser Show. And interestingly enough, nobody has ever started a show. Very few people have started a show about raising capital. So I think that's one of the reasons that it's grown so wildly, is because everybody's got a show about multifamily or passive investing or the different things that they need to learn about it. But nobody talks about 50% of the business, which is the raising capital side of things. So that's why I'm interested. I know that you're in the capital markets and you work with funds. I know that that's probably a major interest for you too, because if you can master the capital raising side, your services will be in demand forever.
Yeah.
So that's why I want to master it. And some people say, in order to become a master of something, you have to study it for 10,000 hours. So that's what I'm doing through this show, is just learning about it. And it's been a lot of fun, because all I'm really doing is meeting people and creating relationships.
Yeah, no, and I think that's at the heart of it, right? It's just that, I always say that like you mentioned, I mean, half of the game is you've got to be able to raise capital, because if you've built an acquisition platform that brings you deals that you're vetting and you're scrubbing and you're doing, that's a system unto itself. And, but fundamentally your constraint will be capital. If you become good at knowing what deals are in your market, and that's a big part of your differentiator, you're going to end up it's going to outstrip your own personal balance sheet more often than not. I mean, it's the acquisition game, it's hustle, man. It's you got to be out there, your negotiations, you got a lot of balls in the air, very few things are coming through. So, being able to capitalize, your deal flow systematically is, as you mentioned, it's a whole nother thing that requires sort of, a different set of systems. But fundamentally, to build a relationship with someone to the point where they know, like, and trust you, with the operative word being trust. And I think that is the transaction. The transaction is, do I trust you with your money, right? You have to overcome that hurdle before they're going to be willing to put 25, 50, 100, 200, 500, $1,000 into a deal. But if you're busy out there kicking dirt and, and looking at properties and whatever, it's kind of hard to do those two things simultaneously. And I think that at the heart of it is that in order to trust someone, you have to have a relationship with them. Mm-hmm. And I think that's what, just watching Ruben from afar, he's a great listener, right? And he's a great striking up conversation. And I think that, that's what you see is in this industry, though, is that, there's a lot of people out there that are, of the capital raiser ilk. And what that means is that they're good with relationships. They're good at educating. They're good at explaining. They're good at doing those things. And that seems to be and has been the winning formula for many, but especially in this digital age that we live in. So, with you, what has been like on the show, like the biggest surprise, like the thing that you didn't sort of, going into it, I understand like fundamentally you're thinking, hey man, I was good. I taught people showed up, they were interested. There isn't a show for capital raisers. I'm going to do one. But what was the thing that kind of happened that surprised you that you're like, that wasn't what I expected?
So I used to raise for multifamily using cash, right? So we would find a partner. They would give us the money, or we would partner, create an LLC, and then go purchase these things cash. I think the biggest discovery was almost right away. As soon as I started the show, I would ask people, hey, how do you raise capital? I started a show about raising capital. How do you do it? And they would give me some paradigm shifts, right? Like, okay, so number one, that's the wrong question. Instead of asking, how do you raise capital? You should focus on, how can I create an opportunity for somebody? Because before you can get somebody to invest with you, there has to be a service that you're providing, right? So it's not about what is in it for you, Ruben. How do you get the money? It's what can you do to provide an opportunity for an investor, because an investor doesn't really care about you or your business. They care about how you can help them create passive income or get them to whatever goals they are, maybe financial freedom, or spending time with their grandchildren, or putting their daughter through college, or getting on a beach. For a lot of people, they want to be on a beach and they're stuck in this 9-to-5 or in this S quadrant style business, and they're looking for a way to do it. So that was the biggest, I think, aha moment for me, was that it's not about that there's techniques and strategies for doing something for you so that you can provide value to your company. It's really a shift of mindset so that you're focused on the investor. And you mentioned something earlier. You said the operative key in the know, like, and trust triangle was trust. And while trust is extremely important, I would even challenge your mindset a little bit there, because people can never like or trust you if they don't know you. Mm-hmm. Right. So that was an aha moment for me too. I heard Dan Hanford talking about that. So how do you get people to know you? Because without them knowing you, they can never become your friend or learn to trust you or see your track record or find out about your company or things that you've done. So then how do you do that, right? How do you get people to know you? Well, you have to be super active on social media, or at least some people do. Some people like that. And a thought leadership platform is a great avenue for that. I have met and interviewed a few people, though, that don't use social media, period, at all, and still raise capital. So then what is it that they're doing? They're still out there creating relationships, right? So getting people to know, like, and trust them. And that is, some of it is just picking up the phone or going to meet with high net worth individuals or people where money hangs out. So I think those are great strategies.
Yeah, definitely. And I think that it's like you said, it's like, and that's our big thing too, on the Verivest side, we've created this sponsor directory. People ask, like, why'd you do that? And I'm like, because the problem is that most of the people that I'm trying to do business with and provide middle and back office administration services to, it's all dependent upon raising money. So if people don't know they exist, then how could they ever put money into them? So we sort of share the same problem. There's a bit of alignment there, right? And it's about awareness. And that's my whole thing that I tell people all the time. Like, as far as the majority of the world is concerned, you don't exist. No one even knows that you're out there, mm-hmm. right? And since you can't be everywhere at one time, it just doesn't work. But it's not the holy grail, right? Like that. There's not that simple, right? It's just a line in the water. Show up in the directory. So if someone searched for multifamily people doing deals in Phoenix, that you at least show up on their radar screen, right? But that's just step one, as you said. Like you just have to know you exist is the first thing before they could ever come to trust you. And so I just think that it just can't be overlooked. Is that just the fundamentally at the heart of it is just a relationship. We are all relational, and we've experienced this through this pandemic, that when you take that away from us, it starts to affect all of us in interesting ways, and usually sort of negative ways, just not being able to be in relationship. So, as we go forward to your point, now it's sort of these digital platforms, really, social media or whatever, for many people, it's the easiest way to do it. And your reach is a lot further, right? So you can touch a lot more people, by getting out there. And I think that's where you see that most are sort of taking that, that angle. And I think, and because of that, right, with this whole dynamic of the fact that, trying to acquire deals and negotiate deals, when you think of it from an operator's perspective, right, like, they have to network with brokers. They've got to know the people who are, in the know of what's on the market or who's going to sell what, and, and not to mention contractors and, things like that. All those things that you have to do, that's where you have to invest your energy. So what we're seeing is, and I think what Ruben's seen with many of his guests, right, is that many people like Ruben have realized that they're as passionate about multifamily as the guys who are buying it, and they like to build relationships. They like to educate. And so you're seeing a whole like uprising of individuals or, influencers or, educators or, capital raisers, ostensibly, right? And really in many ways, it's those relationships that they build. And so I think what we're going to see, and I think, Ruben, you've seen this, right, is that much of the deal flow is going in the future as we go forward is going to be gated because operators would rather deal with, capital raisers or guys like Ruben that, so they can do their job and they can have fewer number of relationships to maintain. And so I think you're going to see that continue to happen. Would you agree? And do you feel like that's what some of your guests are really taking advantage of that are on your show?
It's an interesting concept, right? So people would rather deal with the capital raisers. If there's somebody that's got a fund, and I think you're leading me in this direction because you know that I want to start a fund, and then everybody will want to deal with me. But interestingly enough, not everybody likes to create relationships. And this game of multifamily really is a team sport, because I have people on my team, and I'll share with you a misstep that we were kind of going through when I came on board with Bakerson, which was, we had built a little circle of influence and friends and family through the wholesaling business, and then started wholesaling multifamily, and then started syndicating multifamily. And we got to a point where that network was tapped out, right? So in order to grow, what do you do? Well, these guys they like building relationships with brokers and with contractors and with even residents within the community. And that's special because they're creating an impact for the community and cleaning it up and making it a nicer place to call home for these residents. But they don't necessarily, people within my organization, like to go and do this networking thing and this relationship building thing and raising capital. Sometimes people have a limiting belief is like, if your focus is on like, how do I solve my capital need versus like, how do I go and help people, then it can become a very like stressful kind of situation and people find themselves all day long within this industry up against the wall with the capital raise, and time is, crunching away, and it's almost time to build that thing. But yeah, I think it's been a major assistance for my team for me to come on and share our message, share what our vision is, how we're helping communities, and get that national exposure, which we lacked before I came on board. And for me, like the major thing that I got out of being a part of Bakerson is now I could align with somebody that had a track record, and I could focus on the skill set that I have, which is like meeting people and some of the things that they don't like to do per se. Although I will mention that it's starting to become fun for the team building relationships, and they don't look at it as like this, oh, we have this capital need. Now it's just like, hey, we're meeting people, and it's becoming a lot more interesting and fun.
Yeah, I think you're right. And I think, you hit on that key point, right? It's the pressure of the close. Like you finally found a deal that's worth doing, and you have this need, and that you've got X number of relationships of investors, but there's a time crunch. Like you've got to get that capital in the door to close. There's earnest money, right? You got your, you got money on the line. You can't close this deal, your reputation, right? So I think how I translate, like what you're saying is that kind of puts you in this, you're like in third gear. You're in this, like, it's kind of stressful. So last thing you want to do is you're tight. You're not really interested in building relationships, at that level. But once you start to get more of that machine and you've got these, you're building these relationships, you can start to look at it like, okay, we got this deal. It's more efficient. And I think that's where, for me, just watching as an industry matures, with venture being probably our best, the best thing we can look at, right, is that venture capital and angel investing, and how you fund startups and and all those things through the late 90s and into the 2000s and those sorts of things. But I think the same thing is sort of happening in real estate, and I think that's where you're going to see more. The angel investor equivalent, is a bit of like you and your peers, Ruben, right? Is sort of you're becoming like mini little private equity real estate firms, because your ability then to solve a problem for those who are totally passive, right? And then those who are the operators who really, they're in the weeds in trying to get deals done. Your ability to work with them and develop relationships with and understand how they do business and the types of deals that they're doing, and sort of be another set of eyes that's independent, right? The value that you can provide to the upstream investor then is to be able to know where they're coming from and build relationships with them and what their objectives are, and find opportunities that aren't necessarily just localized to one geography or one, asset class, or, and it's the same thing is that in venture capital, you've got venture capitalists with big funds, and you've got, the smaller guys, but it's all about how do you efficiently capitalize opportunity, right? And fundamentally, real estate is a safe harbor, right? Because it doesn't move on you. There's only so much of it. Mm-hmm. It generally appreciates over time.
Yep.
It generates cash flow. I mean, all the things that we all, know and love, but it's just access to it isn't so easy. There's 200, publicly traded REITs that you can get access to, and there's a lot of good things about REITs, but there's also, you're exposed to volatility, it's more correlated to the market. So there's all those things, but foundational to it is relationship, and those who have the relationships, that there is value in it, and that's sort of the role that guys like Ruben play, and many of the guests you've had on your show. So yeah, you kind of hit on it, before, like moving forward for you personally, is the notion of starting a fund, and do you see others doing that, or is that sort of like you feel like you're kind of on the bleeding edge of that, so to speak?
I'm in study mode right now. I'm still looking at it, but I kind of want to go in this direction for the passive investor that's listening. I think when they hear the word capital raiser, their guards go up. They instantly become kind of like, oh, this guy must be a scam, or he's just looking for my money. I kind of want to walk the passive investor and, through my mindset, and kind of pull back the curtains as to what I've learned on the show. Yeah. Because, dealing with these people that can write you a check and then you take down a property is very different than a passive investor. And what we've learned and I'm specifically going to talk about how people in the syndication world target and talk to and proceed to create relationships with passive investors, with the listener, for the person that's listening to me. Mm-hmm. What I've learned is this 4-step process, so that you can kind of see how I do, in case you ever want to become a capital raiser yourself or not, or just understand how we think. This process I was walked through it's a 4-step process. And I was taught by Jason Yarusi, who's a syndicator out of New Jersey, I believe, or New York. I think he's in New Jersey. And he said, the first step in the capital raise for raising from limited partners is to get people to know, like, and trust you. And that entails social media, networking, meeting people, getting on the phone with them, finding out what their pain points are, discovering if there is an alignment with what you're doing. And then step 2 is, once you have contact with these people, is to get them to understand why you like multifamily, explain your track record. What is it about that specific asset class that you like, and why it aligns with your personal values? Whether it's generational wealth for your children, or cash flow, or all the crazy tax benefits through cost segregation. Mm-hmm. And then you have to make sure that the people from step 1 like that asset class too, because if you're selling something that they just can't resonate with, like let's say that you're selling mobile home parks and they're like, oh, that's for slumlords, you have to make sure that they like your investment philosophy. And if multifamily fits their needs and can get them their cash flow, and they feel like they're making an impact and it's good for everybody, then you take them to step 3, which was to explain what it feels like to do a deal with you. They basically find out when they get communicated with, when they get their money back, when they get cash distributions, when are they going to get documents for their taxes, all of that information, and try and explain what the investor experience is. Like, are you going to be able to go into a portal and see what's going on with the property in a given time? Or do you have to wait for communication, things of that nature? And you have to go through those 3 steps before you ever do what Bakerson was doing, which is step 4, before going through those first 3 steps. We would find the deal, and we thought we had this mentality that, like, if the deal was good enough, the money will come. But if people don't know you, it's very challenging to get them to know, like, and trust you, and then explain why multifamily, and then explain what the deal structure is. And, you're trying to do all this while you have a deal, while you're raising, and it's such an uphill battle at that point. So this is the 4-step process that I learned through a couple of people on my show. And this is what our focus is when we're trying to talk to the passive investor who's listening right now. Really, we want to see if there's an alignment of interest in what your goals are with what we're trying to do, and how we're meeting certain financial goals and making money for not just ourselves and for our children, but for the investor too. And what's nice about being passive is that you don't have to, I think for a lot of people, it's a mission for us to tell people that they can actually purchase a multifamily property, because the majority of the American public is not even aware that this asset class is within their grasp. They think, I have to start in single family, or then I have to make so much money that I can buy the thing by myself. That's not it at all. There's syndication teams across the country that are already experts, that are looking to team with people like you, the passive investor, and basically purchase these properties together as a unit. A syndication is really just a pool of investors that align with a specific syndicator, and funds do this too. Sometimes funds align with syndicators, and then they purchase property together and then kind of ride into the sunset, or at least make money for whatever their philosophy, the period of time in their philosophy is. Sometimes it's 5 to 7 years. Some people invest and keep forever.
Yep, that's right. No, I think it's great, right? It's like when you boil that all down, right? Like at the heart of it is there's a relationship. And I think that for all of us is that, relationships, they're not the most scalable things, because in order for them to be good relationships, you can't have 2 million of them. Right. And I think that, like you're saying, there's teams all over the place. It's like, what are your objectives? What are you trying to do? What kind of, like all of those things, they do matter. Right. In order for that to happen, it's you can't just skip right ahead to say, dude, give me your money, invest in this deal. That's great. Like it's just not gonna work. It's a process. And I think there's more to it than obviously the ultimate objective is that everyone is able to generate income and build wealth. I think that's the similarity, but how that happens, there's a lot more moving parts, and at the heart of it is just relationship and expectations and education and, mutual respect and all those things. And I think that, a guy like Ruben, that's his superpower. And I think that's the beauty of it, right? Is that people with that superpower, it really does. It's so valuable, and without it, it doesn't work. And I think that's at the heart of it, right? Like you have to have it. If you don't have it, they don't know you exist. They don't come to trust you. None of the other things accrue to anybody if you don't have people on the team that are relational and know how to build and maintain high quality relationships. So it's good stuff. I love listening to your show. I love, I mean, it's great stuff. And just, the transparency with which you kind of operate and how you share what you're doing and what you're learning. And it's neat to see. I like, so kudos to you for that, right? Like you're not the guy who shows up like, everything. You're like always learning. And it's great.
That's why people are attracted to the show, I think, is because I'm sitting there learning with them. I've raised just a little above $1 million. So most of the people that I interview have done 10 or 20 or many times more than that. So I'm definitely in the learner seat. I'm trying to figure it out. Particularly like funds are very interesting to me. So I'm interviewing people that have done funds, or even people that help set up funds on a regular basis. people that use for other classes that I'm not invested in. Like I just released a show about somebody that's syndicating notes. They have 5 funds, these different groups, some of them fusion, some of them from limited partners. And talking to people, I get to learn and pick their brain. That's one of the nice things about having a podcast is I can ask anybody any question that I want, because like when you're learning in a seminar environment, sometimes you feel like, oh, they didn't cover this, and you feel kind of empty. So like when I get somebody on my show, I want to ask them the questions that leave me feeling fulfilled in terms of like, I understand now how this person did it, right? How they raised the capital, or how they started the fund, or what conversation they had with their legal team, what kind of stuff was given to them in terms of advice of what structure or things of that nature. And it's very fascinating to me. I'm very interested and very committed to learning ins and outs of this business. So it's a great place for learning because the person that's listening can also learn with me.
Very good. So where can they find you? How do we find the podcast?
capitalraisershow.com, or you can search whatever platform you like. You know, I think we're on Apple, Spotify, Stitcher, and a few other places. We're trying to get I think it's a Roku channel or a Pandora channel, one of those channels. So we'll see what develops, in the future. But for the most part, you can just plug in your ears to whatever your favorite platform is, and you'll find us there.
Awesome. Cool, Ruben. I appreciate it, man. Good times. Take care.
Thank you. Yeah, you too, man.
All right.
Awesome.